Welcome back, and in our top business story, a service fee index will be issued next month, which is set to define fair service fees and analyse cost, quality and overall service, as stated by Dubai's Real Estate Regulatory Authority. While the implementation of the index is not compulsory, the CEO of RERA, Marwan bin Galita, states that it will bring more transparency into the market and reduce the disputes about service fees. Bin Galita added that investors and end users are now seriously considering the kind of service charges being levied before making a decision on whether or not to buy a property in Dubai. As a number of homeowners are unhappy with the high charges they have to pay, the regulatory body is working towards decreasing the fees by 17% this year. Etihad Airways has confirmed that its equity stake in Virgin Australia has reached 10%. The rise comes off the back of an approval from the Foreign Investment Review Board, which gave its approval for Etihad to increase its holding from 5% to 10%. The share represents 221 million shares, which have been bought on the open market over recent months. Etihad Airways President and Chief Executive Officer James Hogan stated that the equity stake would lead to more revenue-generating opportunities. Abu Dhabi welcomed 1.37 million hotel guests between January and July of this year, showing an increase of 11% over the corresponding period last year, and is on track to meet its annual target of 2.3 million visitors. Abu Dhabi Tourism and Culture Authority revealed that the average length of stay over Ramadan rose to 2.84 days, an increase of 6% on the corresponding month last year. Food and beverage revenues remained constant at 98.1 million dirhams to ensure 7-month takings were 10% up on last year, totalling 1 billion dirhams. And let's now take a look at the stock indices across the GCC. And looking to other news now, all eyes were on the Jackson Hole Symposium this past week, as several of the world's most powerful central bankers convened in Wyoming. Currency and commodity markets were volatile throughout Bernanke's speech and closed largely on the front foot against the US dollar. So we earlier asked Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East, what Bernanke's speech meant for the trend for the US dollar in the week ahead.
I don't think you can do much to establish the trend of the US dollar in the week ahead. And the reason I say this is because although we had Ben Bernanke speaking on this past Friday at Jackson Hole, we really didn't see any change in rhetoric. He continued to maintain that the Federal Reserve would be standing by to take aggressive easing measures for the US economy. And this is assuming if the economic conditions, particularly the jobs situation in the US, continues to worsen. So to be quite honest, we haven't seen anything new here. All eyes will now focus towards Friday's U.S. non-farm payroll report to see how the job situation is panning out in the U.S. economy. Now remember, there's about 125,000 new jobs expected to be added during the month of August. This is well below the 163,000 added in July, and the overall unemployment rate is expected to remain unchanged at 8.3. But last week, the Fed chairman from Atlanta, Mr. Bullard, had said that job growth in the U.S. has to consistently fall below 100,000 before the Fed would be forcing their hand to act with regards to additional easing measures. So to be quite honest, even if we see a figure between 100 to 130, although it would be disappointing, it doesn't warrant the Fed to act. And therefore, the ball will now move to Europe, which would be the main drive in risk sentiment this week. We do have the ECB meeting on Thursday. They're largely expected to cut rates to 0.5%. That's a 25 basis point cut. But more interestingly, this could be the forum where ECB President Draghi could announce that large-scale government intervention in the bond markets. And if this happens, then we will definitely see risk appetites soar, similar to how they did during the LTRO. So all eyes on Thursday's ECB meeting.